Good morning, everybody. Thank you for joining us today. I'm just going to allow another minute here to let more people filter in. All right, it looks like more and more people are starting to file in, so we can go ahead and jump on in. Good morning. My name is Adam Reynolds, and I'm joined today by Sarah Grace Moore. Together, we are part of the Mackey team, and our goal today is to talk about the new PPP regulation, what you need to know, how it impacts you, and if you can qualify for the next round of funding that is coming available. So for our agenda today, we first want to talk about the tax environment. There's been some changes to the taxability of the original PPP and idle advances. We want to talk about just general changes to the first round of PPP funding in general, talk about how do you qualify for the second round itself, this crazy thing called the necessity requirement, which I think is not talked about enough as it relates to the PPP round 2. And then we can get into how the loan's actually calculated and get into something you may or may not be familiar with. It's the Employee Retention Credit, also known as the ERC. So you'll see here that we have left plenty of time at the end to field questions for questions that you have. If you have any, please put them in the Q&A box down below, and we will get to those at the end. Hopefully I'll touch on most of these throughout the presentation and cover them as we go along. So thank you. So the first thing I want to get into is why we do what we do here at Mackey. So our entire goal is to really help business owners transform their business and personal lives and help them achieve all of their financial goals. And you'll see that everything that we do is built on what we call the prosperity ladder. So as you look at the prosperity ladder here, you see at the bottom, everything is built upon data. So just like a normal ladder, you have to have a good solid foundation before you take the next step up. So without good, accurate data, you can't see where you are today and make confident decisions as you look to grow, improve cash flow, improve profitability, improve your lifestyle, and then ultimately leave a great legacy. So today's presentation, the PPP, really focuses more on this cash flow piece. You know, the intention of the PPP is to help small businesses who need the money to have an injection of cash flow to keep their employees retained, and to help make it through this challenging time so that you can thrive and flourish on the back end. And as you all know, without cash flow, businesses can't survive. So it's the backbone. It's absolutely what you need to be even able to think about what tomorrow looks like. So once you have good cash flow, we move into profitability. So that's where you can start thinking about investing in your sales and marketing plan, looking at your margins on your services and your products, talking about how do I meet capacity needs with my team and how do I invest in my team to be as good as they can be. So it takes cash flow to typically invest in those things, and that's why cash flow leads to profitability decisions. And then ultimately, the next piece would be your inner lifestyle. It takes blood, sweat, tears, cuss words, probably all of the above to run a business any given day. And you wear many hats as a business owner. That's not sustainable long term. It drains a lot of your energy to really be able to run a business. And so once you have enough profits that you can invest back into your team, you can build a team to help you focus on what you do best and manage the company so that everybody's working together to grow the results of the business. And then as far as legacy, your end game could be to grow a business, sell it for the biggest multiple. It could be a family business where you want to build a financial foundation that can allow you to transition the business to the next generation. It could be that you want to build a social enterprise business that's really going to leave an impact on the world. Whichever your model may be, you need to make different decisions at different points related to your lifestyle, your profit, and your cash flow to get there. But it all starts with data, and let's dig into the cash flow piece of the PPP and how it can help you make your way up the prosperity ladder. So first, we want to dig into the tax environment, just because there have been some changes, all very positive, that have made great improvements for small businesses as they look to file their 2020 taxes. The first piece here, I should actually add an asterisk, because I have a note here that says no tax impact from PPP forgiveness. So if you recall, back when the first PPP was granted to small businesses, it was treated as non-taxable income. Well, the tax experts looked into the legislation, the regulations a little bit more, and it was clear that any expenses that are paid for with non-taxable income can be deducted. And then there was a mass fear of a taxable impact from the PPP loan. With the current regulations that just came out with the second round, they did clarify that there is no federal tax impact from your PPP loans. I do want to emphasize federal tax impact because there are some states that follow along with federal tax code and just adopt the tax codes as they get updated. Some states have to make a vote on it, and some states have no tax income at all. So you'll definitely want to keep that in mind as we look at what's to come over the next couple months. Obviously, decisions need to be made sooner rather than later because tax time is already upon us. But there is no federal tax impact from the PPP, and it may vary state to state depending on what happens. We're continuing to learn more, research this, and we'll keep you updated as we get updates ourselves. One side note from the tax impact is specific to S corporations. So S corporations are required to keep enough basis in the company in regards to how much money they take out of the business. So if you're an owner of an S corp, you cannot take out more money from the business than you have basis or leftover earnings in the business to take out. And what's nice about the PPP loan itself is that once it's forgiven, that other income, that non-taxable income, actually increases your basis, which allows you to take out future money at a higher level from your business. So that's a good all-around financial tax impact for the PPP, and we're great to see that come through. The second piece we have here is all about your EIDL advances. So if you did receive a PPP round one funding, and you did also apply and receive an EIDL loan, they made a couple of changes to how the advance is treated. So if you recall, when you first went and applied for your EIDL loan, there was a little checkbox button where you could say, please send me an advance of funds while you process the loan application. And this advance was up to $10,000. So the calculation was $1,000 per employee up to $10,000. Previously, before this legislation, that $10,000 would reduce your PPP forgiveness. So as an example, let's say you got a $10,000 EIDL advance and you received a $100,000 PPP loan. The maximum forgiveness previously that you could receive on your PPP loan would have been $90,000, that $100,000 minus the $10,000 advance. They have now come back to say that these EIDL advances will not reduce your forgiveness amount, and those advances are grant income that will not be taxable as well. So if you have already applied for your PPP forgiveness and you did not, and you adjusted your PPP forgiveness amount to reduce the amount of your EIDL advance, then you can go back to the bank, say, I need to amend my forgiveness application, and they'll be able to take care of that for you so that you can actually achieve full forgiveness. If you have recently applied for forgiveness on the PPP, I have seen where some lenders now automatically have captured this change and have just given full forgiveness. So it could just be a timing point of when you actually filed for forgiveness. But if for whatever reason you did not achieve full forgiveness earlier because of this, work with your bank, go back and get the full forgiveness amount. Next up on the list here is stimulus payments. So if you qualify and you have an income amount under a certain threshold, $75,000 for an individual taxpayer, $150,000 for a married filing jointly taxpayer, then you were eligible to receive a stimulus payment. There was one in 2020. There was here one recently in 2021 as well. And the original question was, is this going to impact my taxability when I go to file my tax return? So more clarification came out on this, and it's actually an advance on a tax return credit that you would receive. So what does that mean? When you work with your tax preparer come April to file your taxes, what will happen is there will be a form that they'll fill out, you should receive an IRS document, kind of like you would with a mortgage interest statement or your W-2, etc., that you should get in the mail. And if not, you can still find other ways to provide that information. But you work with your tax preparer to say, here's the amount that we should have received based on the stimulus definitions. And that's, again, $600 per individual, $1,200 per couple. There's some tax credits in there for children as well. It'll calculate, here's our total amount that we should have received. The next line will say, here's the amount that we actually did receive. And then it'll calculate and say if there's a difference. In most cases, those two amounts are going to be the same, and it's just an informational form that your tax preparer will have to fill out and provide. So there's no issues that will arise from that standpoint. There are some cases where your amount that you actually received will be less than what you should have received. The biggest example of this would be if you had a child in 2020 that wouldn't have been on your prior tax return. You should receive an extra credit for that child, and it will increase your tax refund or decrease your tax liability by the amount of the difference there. And then in very rare cases, I actually don't know of an example of why this would happen, but it could just be a clerk error, so to speak. But if you actually received more money than you should have received, the legislation has said, do not worry about it. You do not have to pay that back. This was all good faith money to help you during this tough time. So no impact should overall really come from the stimulus payments in terms of increasing your tax liability. It's just a matter of timing of when you would get these stimulus payments throughout the year. The last piece, which I will not spend much time on, is this payroll tax deferral. It was around with the first PPP loan. It's still around. You can defer as an employee payment of your payroll taxes. It is heavily not recommended by me or my team to do this. We posted a blog a while back around with the first PPP loan on the risks that you take on if you decide to defer your payroll taxes. So we do not recommend it. Please check on all of your other options before you even consider making a payroll tax deferral. So those are more of the 2020 changes. They also implemented some changes for 2021 and beyond as well. The goal of these changes were to really help some of the industries and the groups that were really hit the hardest by the COVID-19 issue. So if you think about cash flow being tight for business owners, being tight for taxpayers, Americans in general, the IRS said, we really want to help nonprofits get more money in the door. So if you're familiar with the your tax return, there's a standard deduction and there's an itemized deduction. For people that itemize their deductions, they're already getting credit for any charitable contributions that they make, but many taxpayers just take the standard deduction. So for 2021, what the code's going to allow is an additional above the line tax deduction for any charitable contributions up to $300 for an individual or $600 for a married taxpayer that you can get in addition to what you would normally take as a standard deduction. Again, it's to help nonprofits get a little extra cash in the door and help them during this time. The second change is geared towards restaurants. We've all seen how hard restaurants have been hit by this with the shutdowns and all of the mandates state by state, depending on which state that you're in. They've been hit really hard by everything that's been going on. And to help in one portion is to allow businesses to take 100% business deduction on their tax return for food and drinks that are purchased from restaurants for 2021 and 2022. Again, typically this deduction is limited to 50%, but the idea here is if we can increase the deduction for businesses, it might increase the likelihood that they would spend money at the restaurants and help the restaurants move past this terrible time. So those are some of the highlights from the overall tax environment. Let's get into some more of the tactical things that changed with the PPP itself and the EIDL. If you had received a PPP loan that was $150,000 or lower, you probably have not been allowed to apply for forgiveness yet, because many banks that we've talked to are waiting for this thing called simplified forgiveness. So the idea here is that if you received a loan lower than that amount, there's going to be a one-page kind of simplified forgiveness form that says, yes, I used the money in the ways that I should have, and yes, I used it to help keep my people employed, and you're just signing off on that, and then you're automatically forgiven. There's no official form that has been released yet, so if you haven't heard from your bank yet, sit tight. I expect, or I guess the word is that we should expect this form around January 20th or so to really get this forgiveness application piece moving forward. And just because you have a loan amount under that $150,000 threshold does not mean that you shouldn't document everything to support your spending. So the best practice that I can recommend for you is you actually fill out the long form application and say, here's the amount that we spent on payroll and other qualified expenses, and still just be able to have that documentation in case down the road the SBA were to request any additional documentation, because you are required to keep those documents for so many years. So please be sure that you keep all of your documentation, even though you will be able to fill out simplified forgiveness form. The other piece that is new and interesting is that you can actually apply for a first PPP loan again. And this is important because I've seen so many business owners miss out on the first round because of some unclear guidance. So over time, it was clarified that self-employment income for Schedule C taxpayers, partnership taxpayers, that their self-employment income counted towards this PPP funding. And the idea there is that you are an employee, so to speak, of your own company. So you can use those figures to actually apply for your first PPP loan if you did not apply the first time around, or if you just didn't have the need earlier and circumstances changed throughout the year and you just felt like you didn't need it, you can now apply for the first time here. For certain small community banks that are on a qualified list, the applications for PPP round 1 opened up yesterday. PPP round 2 applications open up tomorrow. But for most banks, and depending on who you work with, we expect applications to open up generally sometime next week across the board. The next piece over here, I have a note that you can amend your PPP round 1 application. So kind of going back to the idea that many self-employed individuals did not capture their share of the income on their original PPP application. You could actually go back, amend your first PPP application, add that income in, get funded for that, and then once you use those funds, you can apply for PPP round 2 and get those funds additionally if you meet the requirements. So that could be very, very huge depending on if you missed out on that first time. It was also common knowledge that health insurance, retirement benefits, those were considered payroll expenses that would qualify for the PPP application. Over time, it's been clarified that group life insurance, group disability insurance, group vision, dental, all of those qualify as payroll expenses as well. So if you did not include those the first time around as well, that's another opportunity for you to amend your first PPP application and get an increased amount. Use that, get forgiveness, and again, if you qualify, apply for the second round. So great opportunity for those of you that may have missed out on some earlier funding. The guidance did clarify that if you just happen to make a mathematical error, so if you captured those expenses, but you just miscalculated on the amount and you didn't get the full amount that you should, that doesn't qualify for you to amend your PPP. It's really based on the people that have expenses that they didn't fully capture. So that could change, but that's the way the guidance is stated right now. The next piece is an interesting one, and I don't know how many people it will actually apply for, but there's an opportunity to refinance your EIDL loan into a PPP loan. So if you received an EIDL loan between the dates of January 31st and April 3rd, that's the time frame that they used, you can actually take your EIDL loan and refinance potentially into a PPP loan. And I would assume you'd have to meet this necessity requirement that we'll get into later. But the idea with the PPP loan is that it's then forgivable. You're going to use those monies for the right and appropriate expenses, and then that can be forgiven, whereas the idle loan you actually have to pay back. So that's an important change, but you can only refinance it into your first PPP loan. So the reason I think it limits a lot of borrowers is because most people that got the idle loan also applied for the PPP loan and got it. So you cannot refinance your idle loan into the second round of PPP, but if the only thing you received was the idle loan, you can go ahead and refinance that. And then the last piece here on this slide, I won't touch on it too much. I just want it to be known and share it with you that there was an unemployment funding expansion where there's additional federal funds that'll help those that are filing for unemployment. All right. So now that we've kind of caught up on the changes for the original PPP and the idle, let's dig into the meat of our conversation, which is PPP round 2 qualification. So the first thing that has to happen is you must be a business that was in business and operating prior to February 15th, 2020. If you were in business after that date, I apologize, that's the cutoff. You have to be in operations before that date because that's when a lot of the shutdowns, a lot of the changes happened in business itself. The second piece is you must have used your full funding from your first PPP round. And it doesn't have to be forgiven, but you must have spent all of the money, and it's expected that it will be forgiven. So that's the second criteria. The biggest and probably the least spoken about is this necessity requirement that we have here. And I have more information on that in the next couple slides. That is the most important piece, I think, that will determine whether or not you qualify for the second round of PPP funding. The next piece, which most of you have probably heard, is that you've experienced a 25% revenue drop in a calendar quarter. So when they say calendar quarter, that means a 2020 calendar quarter compared to 2019. So that's lining up Q1 to Q1, Q2 to Q2, 3, 4, 4. And the way that you look at revenue is calculated based on your company's method of accounting. So whether that's cash accrual, it's based on your method of accounting. Again, the intention here is really to help those businesses that need these funds to keep and retain their employees. So if you meet the revenue drop requirement, I think the necessity piece is really the biggest piece that they'll be looking at. And then finally, the last piece is that you have less than 300 employees. This is a drop from the 500 employee threshold that was with the first round, but there's still a 500 employee count for corporate groups and those kind of entities that have multiple locations. So as you can see, the PPP round 1 was pretty widespread. It was available to a lot of different sized businesses. They're really trying to hone in and help those that have suffered a little bit more greatly with that revenue drop being a factor, and they're really honing in on smaller businesses with this employee requirement as well. So let's dig into what is the necessity requirement. So this was a part of the first PPP loan as well, and this is a line directly from the application, which you've probably seen and you signed off on as a borrower when you made your first PPP loan. So the guidance is current economic uncertainty makes this loan request, keyword necessary, to support the ongoing operations of the applicant. So the keyword there is necessary, but what in the world does that even mean? And the funny thing is there's no clear interpretation, there's no clear calculation of what necessary actually means. It's not if I do this and this, then I qualify, or if I have this number, then I don't qualify. There's no real clear guidance on what that actually means. The SBA has come out and said that they will not challenge any loan amounts under $2 million. So if your loan amount is under $2 million, the SBA is going to assume that you're acting in good faith and that as the business owner, you do need these funds to sustain your operations. However, that doesn't mean that somebody else can't challenge your need and your necessity, because the loan is public record. So that does open the door for other government agencies, uh, competitors, angry ex-employees, whatever the case may be. It is public record. There is an opportunity, if somebody were to challenge you, that they could theoretically challenge you. I think that the likelihood of that is probably small, but if in the off chance you are certifying this, we do recommend that you have documentation to help justify this necessity requirement. So let's talk about that a little bit more. The first round, it was pretty easy for almost everybody to justify that, yes, I need these funds to sustain my business operations. Since then, the environment has somewhat recovered. It's not fully recovered by any means, but cash flows for businesses, for some businesses, have picked up a little bit. Activity and revenues picking up a little bit, and they're maybe not hit as hard as they were the first time that this came around. So the necessity requirement is even more important with the second round of funding. So I first want to clarify that it is not my place. It is not my judgment to say whether or not you qualify. It is nobody else's place to tell you that outside of your own, because you know your business better than anyone. It is ultimately your decision whether to say, yes, it is a necessity. Yes, I need this, and it's going to help my business sustain operations. Part of this, I think, is a gut reaction. Since you know your business better than anyone, you can tell right now whether or not the next few months are going to be difficult for you. So part of it's going to be a gut reaction instinct that's going to guide you to the yes, we will apply, no, we won't apply. But what we recommend for best practices is that you back up that gut reaction with some logic and some financial data. So the first thing that we recommend everybody does to help them qualify and justify the necessity requirement is creating a 6-month cash flow forecast. Now, I'm not saying that you have to do this huge in-depth line by line throughout your entire financial statement saying, here's all the ins and outs of my cash flow. I think it could be as simple as, here's where our cash is today, add in here's what cash we expect to receive over the next month, subtract out the cash outflows, things that we're going to pay for, and it's going to give you a net number. Do that for a 6-month period, just looking ahead. And once you look at that, for some people, it's going to be very obvious that cash flow is going to be tight, and yes, you qualify. For some other people, it may be obvious that our cash position is actually in a good place, and we feel like we've recovered at this point, and we don't need to actually apply for the second round. There's probably going to be a lot of you in the middle that's kind of in this meh space where, do I still apply? It's not going to be comfortable. It's not going to be perfect. This doesn't give me my full answer. And if you're in that space, there's a couple other pieces that we think you should evaluate a little bit further and see how that impacts your cash flow forecast. So look at documenting a potential shutdown scenario. That's for you personally. That's for your upstream vendors. That's for your downstream customers. If anybody in your space shuts down, how does that impact you? So many people right now have limited cash flow savings. And if a shutdown were to occur, that's going to deplete all their savings, and they would definitely need the PPP round 2. Some people have a couple of months, but again, depending on how long that shutdown lasts, how much of an impact does that make on your business, and how much does that hurt you? So think through your entire supply chain, customer chain. Think about you personally. Are you at risk for a potential shutdown, and what could that do for your cash flow? And the final piece that I have listed here is really thinking about your business health versus the idea of employment. And this actually came up from a conversation that I had with a client last week. She mentioned that savings were okay. They were not great. In the past, we've always recommended businesses have at least 3 months of savings. With the whole COVID experience, and maybe even more than that we'd recommend at this point, because we've never seen anything like this. But we're fortunate that a lot of our clients had that savings, and now they're at the point where, how do we start building that back up? So this client had okay savings, but the next few months are looking to be a challenging time. And her mindset and her thought process was that I would let go of some of my employees to maintain cash flow at the level that I feel comfortable in my business. So think about that for a second. The intention of the PPP is to keep people employed and allow them to kind of make it through this tough time so that businesses can continue to survive once this is over. So if their intention is to keep employment, and you as an owner would be forced to let go of employees to maintain savings because you don't know what the next 6 months look like and you're worried about a potential shutdown, that could be a decent justification to say, yes, we need this PPP loan. So again, look at all three of these best practices. None of them are exclusive. I'm not saying just do one of them. They all fit together. And it's all a little bit of scenario planning if you're on the fence about whether or not you need the PPP round 2. All right, so let's say that you go ahead and you do qualify for the second round and you're looking at filling out the application. So how do you actually calculate what to apply for? So it's very similar to the first round. So you look at your total average payroll costs. Again, that's your actual wages. That's your health, life, dental, vision benefits. That's your retirement contributions, all those payroll costs. Average those out over a time period, and you get 2.5 times that amount as a PPP loan. Now, if you are a specific business, typically in the hospitality or restaurant style business, there's an NAICS code on your tax return that starts with the number 72, and that's for restaurants, hotels, etc. If you meet that threshold, you can actually apply for 3.5 times that number and get a little extra PPP funds. And the reasoning behind that is because those industries have been hit even harder than many other industries, and they're going to supply them with a little extra cash flow to help them get through this tough time. Now, keep in mind that there is still a $100,000 wage threshold. So if you have employees over that threshold, be sure to limit that down to the $100,000 limit when you're calculating your qualified payroll costs. But for the most part, very similar to the first round. And in general, your second round loan amount will probably be pretty consistent with what the first loan amount was, or at least in the ballpark for most cases. The next piece is time period selection. So as you're calculating your qualified payroll expenses, you get to select which time period is most advantageous to you. So right now you can use all of 2019, take the average payroll cost there. Now that 2020 is over, and I must say thank you 2020 for finally being over, I will not miss you. You can take the average payroll expenses for 2020, or if you apply in February or March of 2021, you can actually use the 12 months preceding your application date. So again, if you apply in, let's just say February 1st, 2021, you can use your February 2020 through January 31st, 2021 payroll expenses and use that average. I think the best practice here is, we're already halfway through January. You can probably reasonably estimate what your payroll expenses are for the rest of the month. I would recommend best practice is to calculate all three and see which one gives you the best application number in terms of what you can apply for. The next piece here is similar to the first round of PPP. It's a 60-40 split. So as you look at spending, once you get your PPP funds, you have to think about how are you spending the money. And you still have to maintain a 60-40 split in terms of the expenses that you use this money for. The 60% must be used on these qualified payroll expenses. So those are all the expenses that we just talked about. The 40% can be used for certain other expenses, very similar to the first round: rent, mortgage interest, utilities, and they've added in some additional expenses. Probably the most applicable would be expenses that help you get your team up and running to work from home. So an example of that could be we had to buy a new software to make sure that our team was effective and efficient working from home instead of in the office. Or it could be home office setup and supplies, computers, etc., to help get your team up and running so that they can work from home. Those expenses will qualify as part of that 40% expense bucket for the PPP round 2. The last point here is just a little side note that says if you're going to use the same lender and you're going to end up using the same figures. So if you use 2019 numbers to apply for your first PPP loan, you're going to use your 2019 numbers again. You already have all that documentation. The only thing you need to document is your 25% drop in revenue, and your application process should be pretty easy, and you should run through the checklist pretty quickly. And continuing on with other PPP round 2 notes and calculations, there's still a full-time employee equivalent calculation that you have to meet. Again, the intention is to keep your employees employed. However, that's not 100% possible in all circumstances. So there are some safe harbor guidelines that will help you not be impacted by that, because otherwise, if you do not meet the FTE requirements, you are losing out on potentially some of your forgiveness of the PPP loan. So the safe harbor requirements are really just to show that you made a good, honest effort to keep your employees employed. So let's say that an employee is set to retire and they leave voluntarily. That's not going to count against you. Or if you had previously let go of an employee because of cash flow issues, and you went back to them and asked them to return to your place of business and they decline. As long as you document that you made that good faith effort, then you're covered there and you will not be struck with a negative impact. The other pieces are along the same types of lines, so just be sure that you're aware of those and make sure that you're documenting those so that they're a part of your permanent records, just in case anything were to ever come up, or if you have had to ever share your documentation and your reasoning with your application. The next piece here is the expense period. So this is the period that outlines when you're spending on the qualified expenses. So this is very similar to the first round as well. You can either choose an 8-week period to use the entire PPP loan amount up through a 24-week period to use the money for qualified expenses. I think this piece will be even more critical for businesses this time around because they had so much flexibility. So let's say that you use all the funds in your first 8-week period. You could then apply for forgiveness, and most likely you should get everything forgiven as long as you meet your criteria. But let's say business doesn't pick up after that 8-week period and cash flow gets tighter. Now you don't have to wait the additional time period if you have to choose to let somebody go. Obviously, that's not the ideal situation. If you have to make employment decisions, this expense period calculation just gives you enough flexibility to figure out what's best for you as a company. The current and updated regulations did clarify that Schedule F taxpayers, so that's your farmers and nonprofits, do qualify for the PPP. So again, you can qualify for the first round, qualify for the second round if you meet the requirements. They just clarified that you can apply, and the guidelines are very similar with all the other different types of businesses. The next piece really goes into new entities. So there are plenty of businesses that were not in operations for the year 2019, but started early in 2020. Again, if you recall, the requirement is that you have to be in operations as of February 15th, 2020. So there's a short gap there in terms of when you could be a new entity in operations. And just depending on what type of entity you are, you can use different self-employment income methods, payroll calculations to say, here is our PPP application amount, and you could still apply for PPP round 2. So just keep in mind that there are specific regulations for new entities. Look into those, see if you qualify. With this regulation, they set aside a specific amount of funding for what's called a shuttered venue. So these are venues that had to shut down completely. Think of like a concert venue or like an Aronoff Art Center here in Cincinnati, places like that where they had to close doors and they have live entertainment. Those places have a specific fund where they can apply for up to 40% of their 2019 revenue. Let me say that again, 40% of their 2019 revenue. It's not a multiplier of your payroll. It's a flat percentage of what your revenue was that year. That is a huge opportunity for those businesses that were hit hard and qualify as a shuttered venue to get that money. And then they will be required to use it like the PPP, qualified payroll expenses, etc. But it could be a very large amount for those certain businesses. So the next piece is just to keep in mind that March 31st is the deadline to apply for the PPP the first time or your PPP round 2. Once these funds are gone, they are gone. Again, we saw that last time. There was additional funding that came about later in the year. We don't know if that's going to be the case, so keep in mind that apply as quickly as you can to make sure that you get the funds that you need for your business. And then lastly, any amount that is left unforgiven, which should be in rare and minimal circumstances, this starts as a loan and then converts to tax-free income. So that loan is a 1% loan that I believe you have to pay back over 5 years. So the interest rate is minimal, but with the expense period, you can use it over 8 weeks, 24 weeks, somewhere in that time frame. There should be very little reason that you should not be able to get that full amount forgiven so that it's not a loan and it moves forward as tax-free income. All right, so the next piece that we have here is what's called the Employee Retention Credit, or otherwise known as the ERC. This was around with the first PPP loan, and it did not get a lot of attention because when it first was talked about, you could either apply for the PPP or the Employee Retention Credit. Well, as part of the updated regulations and guidelines, they have now said you can apply for the PPP and receive the ERC, Employee Retention Credit. And that's retroactive for 2020, and it's in place for the first 2 quarters of 2021 as well. The only caveat is that you cannot use the PPP funds and these ERC credit funds for the same payroll expenses. So what does that mean? Pretty much they do not want you to double dip. What that means is, as we look at how to be strategic about how to use both of those funds, if you qualify for both, how can you use those funds strategically to cover even more of your payroll costs? They just can't be the same payroll costs. So just to outline the qualifications, there are different guidelines for 2020 and moving forward for 2021. So for 2020, it's from the time frame of March 12th through, and I apologize, there's a typo there, 12/31, so end of the year. And you have to have 100 monthly employees on average for the quarter for you to qualify. And the requirement is that you had to have a period where your revenue was 50% of where it was in 2019. So just like there's a revenue requirement for the second round of PPP, that's only 25%. For the 2020 Employee Retention Credit, it's a 50% drop. So it's very targeted to businesses that were heavily hit by COVID. So if you qualify for the 50%, you can apply for this ERC for 2020. In 2021, they actually expanded it a little bit to apply for even more businesses. So for 2021, this drop only has to be a 20% drop in revenue. So if you look at January through March 2021 and you have a 20% drop in your revenue as compared to the first quarter of 2019, then you would qualify for the ERC qualification as long as you have less than 500 employees. So they also expanded the employee requirement there. The total credit amount varies a little bit year to year as well. So for 2020, for both years, your threshold is $10,000 per employee per quarter. So for each employee that you have, the base amount that you can calculate is $10,000 per employee per quarter. For 2020, you can get a credit up to 50% of that amount. And for 2021, you can get a credit up to 70% of that amount. So again, expand it to reach even more people in 2021. So let's think about that a little bit strategically. If you're only getting 50% of your credit on your wages in 2020, if you qualify, then that still leaves 50% of those wages that can be used towards the PPP loan, especially since you can use 40% of the PPP loan for those other expenses. It's probably a little bit easier if you meet the threshold to use both the PPP and the ERC. 2021 might be a little bit trickier because you can get 70% of those wages. So that's only leaving 30% of those monies left over for the PPP expenses. But what's interesting, going back to the timeline, is you can use a 24-week period, which is a 6-month period. So if you qualify for the ERC, you can be strategic and use a longer time frame. So there are different things that you can try and play with to try and make the most of both of these programs and get as much forgivable money in your business as possible to get you through this tough time. So please just be sure to document it, work with us, work with an advisor, whoever it may be, to help you calculate this and get the most benefit out of both of these programs. And with that, I would like to move over to the Q&A portion. I know we covered a ton of information and there's probably a ton of questions out there. So SG, do we have any questions out there?
Absolutely. We have one question right now, which is, I've waited to incorporate my business until March. Can I still qualify?
That's a great question. So based on the current definitions and interpretations, this could change, but the new entity requirement states that you must be in operation prior to February 15th. So if you were not operating, you do not have your doors open, you were not working, so to speak, by February 15th, 2020, unfortunately, based on that guideline, I would say you would not qualify.
And Emily asks, is it at a minimum of 100 monthly employees or a max of 100 monthly employees for the ERC?
For the ERC, it's a maximum of 100 employees. Again, these programs are more geared towards small businesses because they're hit really hard. They want to make sure that small businesses can retain their employees and make it through this tough time.
And that right now is all we've got.
Okay, so with that, I'll give a couple more minutes or a couple seconds here to say if you have any other questions, feel free to throw them out there. I will say if you have a question, somebody else is likely to have the same question, so don't be afraid.
So we've got some hands raised, if I can find them. Stephen Frank, I'm going to allow you to talk if you'd like to share, sir. Okay, let's see. Diane, I see that you also had your hand raised, so I'm going to allow you to talk if you'd like to unmute and ask a question.
How do you just talk?
Yeah.
Okay, I'm new to Zoom. The shuttered venues, would that also, like when restaurants were forced to shut down for a period of time, is there a calculation in there that would apply as a shuttered venue for those periods of time?
So they are not qualified by definition to be a shuttered venue. And that's where we talked about the 3.5 times multiplier for restaurants. We talked about the 100% business meals being deducted if purchased from restaurants. So those things are geared towards restaurants. There's one other small piece as it relates to the employee retention credit. I mentioned the revenue drops because that's more broadly available. There's also a guideline in there that says if you had to suspend your business for fully or just a partial piece of your business for some period of time based on court orders, government mandates, those sorts of things, which governments definitely had, or restaurants definitely had to do, then they could look at applying for this ERC, the employee retention credit, for that period of time that they were impacted and shut down. And I know that would also qualify for people that, like entertainment venues that were hit by curfews in certain states, but that's going to be a state-by-state basis to really figure out how you were specifically hit for that ERC.
And Jim and Diane, we'd be happy to set aside some time to talk to you guys since you're our neighbors and make sure you're all taken care of. So at the end of this, we'll reach out to you guys for sure. If that works.
Thanks, sir.
No problem. Okay, and Stephen, I'm gonna connect with you one more time if you want to unmute and ask your question. Okay. Maybe we answer Stephen's question.
I hope so. It's a lot of information, so I'm sure there are plenty of questions out there. So of course, the next thing I want to do is offer my support. We work with small business owners all the time. We know how challenging this has been. Here's my contact information. Please feel free to email me, call me, and there's even a Calendly link down here where you can schedule a virtual meeting with me to talk about the PPP, how it applies to your business. I can't tell you how many questions I've had around this necessity requirement because nobody else is really talking about it. So people are kind of caught off guard by, what do you mean by necessity requirement? If you want to walk through what you received in the past, how it applies to you, whether or not this necessity requirement actually is justifiable for you, just feel free to reach out to me and we can have that conversation. We
I do
also
have one question I missed. Sorry, Adam.
no worries.
We have a question from Leo. Do you know if Texas has a tax impact on PPP funds?
So Texas of itself has no state income tax. So that one off the top of my head, I could answer and say, since they have no state income tax, there should be no taxable impact from the PPP forgiveness overall.
Okay, fantastic. And then I do have two more questions.
Fantastic.
We're finally rolling in. Could shuttered venues qualify? Could shuttered venue without employees qualify?
Could shuttered venues without employees qualify? So that's going to be the difficult part. I think this is a whole new idea, and this program is changing rapidly more and more. And they just released some guidance on the second round of PPP itself last week. We're expecting more guidance on the ERC and shuttered venues in general. Again, the intention is to use these monies for employees. So my gut instinct would be it'd be difficult to qualify for that because the intention is to use this money for payroll expenses and to keep people employed. So from that standpoint, I think it's going to be difficult. But as they're always expanding applicability for people, so that could always change as well.
Fantastic. And then Stephen, he got us on the Q&A. Thank you, Stephen. He asked for PPP round 1. It took me 3 months to use the money. So then my period would be 24 weeks, right?
3 months. So there's typically four, maybe 5 weeks in a month, depending on what month you're in. So it typically would be 12 or 13 weeks for that 3-month period. So it's kind of right in the middle of 8 weeks to 24-week period. Again, you have as little as 8 weeks to use all the way up to 24 weeks, whatever makes the most sense for you. And again, if you qualify for both the ERC and the PPP, be strategic about your timeline and how you can use both of those funds to maximize your impact in the business.
Fantastic. And then Kenneth has a question about bonuses. So what kind of impact do bonuses have? He says, we gave a large bonus out in 2020 to an employee. Would this exclude us? It was large. It was 6 digits.
Oh, wow.
7 digits.
That is a crazy amount of bonus. SG, I'm going to hold you to that next year. But the idea around bonuses in general, we're kind of clarified with the first PPP idea. Are they normal in your course of business? So if you have a history of giving out bonuses on an annual basis, then you can calculate that and include that into your PPP loan amount. If this was just a one-time bonus, it's probably going to be difficult to justify an amount that large. The loan amounts in general are up to $2 million anyway. So in general, the guidance is this a normal course of business for you in terms of giving those size of bonus? What's a reasonable amount for you?
Fantastic. And then we do have a couple questions about, will this recording be accessible? Yes, it's now on Facebook Live, so that'll be stored there. And then when our wonderful tech people get this recording all done, it'll live on our YouTube page, and we'll send that link out for you so you can review it. And we'll also send out a link to the actual PowerPoint, so you don't have to listen to us talk for an hour or two. But then I have more questions, Adam. You're very popular. Do the wages used for the average include any taxes, or is it strictly wages and benefits paid?
I will need to confirm that and get a solid answer for you, but I believe it is just the wages and the benefits paid.
Okay. Do shareholder distributions to owners affect forgiveness?
So the shareholder draws are considered kind of your self-employment income, so to speak. So if you're a Schedule C taxpayer or a partnership and you get normal distributions from the business, that's actually supposed to be a part of your calculation for the amount that you borrow and request. So those are actually counted as a part of your forgiveness application to say you use those monies to pay yourself as an employee. Now, if you're thinking that you have, like maybe you're an S Corp or you're C Corp and you have wages and you take additional monies from the business, that does not impact your forgiveness. It's based on, did you use the regular monies to pay qualified payroll expenses?
And they are, to clarify, they are an S Corp.
Okay. So any distributions above and beyond your wages do not impact your forgiveness.
Fantastic. And then we're asked, can you please give example of a refinanced idle PPP with 20,000 as PPP and 50,000 as idle?
That is the newest thing that has kind of shocked the world here in terms of even being able to do that. And that's actually one of the pieces we're waiting on updated guidance on. They just kind of outlined that you can roll it forward into a PPP loan. And the idea is that they just want less people to be stuck with money that they have to pay back during a cash strapped time, and open up the opportunity more forgiveness so that people can maintain their cash flow. Again, once they clarify what the application process looks like, I don't think there's a formal application for it yet. You know, you can work with us, work with your banker to stay informed when that comes up. But the idea that once you roll it forward into a PPP, again, you're spending it on your qualified self-employment income, qualified employee wages, and those kinds of expenses. So you have to abide by all those guidelines once it's a PPP loan.
Okay, great. And I've got a question. Can we get the ERC information that was provided in writing? It was just a bit complicated. So can we write a blog post on that and share it?
Absolutely. And I agree 100%. It is completely complicated. But it's nice that they did expand it and allow for more opportunity for people to apply. And the other thing that's interesting is if you apply for one quarter, you apply for the next quarter until you meet revenue threshold. So there's all kinds of ins and outs about what's happening, and it's going to be best to use examples. So we'll probably have to put together some type of online blog with examples to make it easier for everybody to understand. Because I had to read it 5 or 6 times myself to say, what is this?
Government fun. Okay. We have a question about employees. So from the first time we got the PPP, the number of employees has decreased after our funding ran out. So when we apply this next time, do we use the old number of employees or the current number? Business at this time would not necessitate a need for more employees.
Yep. So the idea here is that you're going to use a specific time frame to calculate your qualified payroll costs. So again, that's all of 2019, all of 2020, or a 12-month period before when you apply, if you apply later in 2021.
Mm-hmm.
So from there, you're going to take an average of your qualified payroll costs, and that's going to be your full-time employee kind of base number.
Okay.
The idea is that if your base employee number is lower, that you're going to reach back out to employees or refill those positions and get back up to that number, because the goal and the intention is to keep more people employed. Now, if you do reach out, and again, as I said, if they decline or people have left voluntarily, there's some safe harbors where you wouldn't have your forgiveness reduced. But keep in mind that there's a potential, if you apply, you might not get the full amount forgiven, and you might just want to pay that difference back.
Great. And our buddy Robert. Hey, Robert. Thanks.
Hey, Robert.
What financial reporting or documents do I need to provide proof of a 20% drop in gross receipts needed to qualify for round 2?
Absolutely. So they've, with tax season coming in now, one of the easiest ways to document that is if you can show on your tax return, on your business tax return, that you had a 25% drop in your revenue, then it's going to be clear that there was automatically one quarter in there that had a 25% drop in revenue. So if you get your tax returns done here shortly in the next couple of weeks and are able to show that, that's one way. The other way is, again, you have to have good data, good records. That's part of our core function of the prosperity ladder. You have to have good data. You can use your internal monthly financial reports and show that comparison and show that decrease in revenue overall.
Great. And
I do think for the forgiveness side that the tax return is going to be more of the preferred method to show that decrease.
Okay. That looks to be, I think we answered all the questions except for one that is a little more specific, and I reached out to them. So, there you go. I got nothing left.
Okay, perfect. Well, hopefully this screen has been up here long enough so that you can jot down this information. Feel free, as I said, to reach out to us. We are here to help. We're offering free conversations to really say, here's where you are. How does this apply to you? And then we do offer a package to really support businesses from the application phase all the way through the forgiveness phase, documenting your cash flow forecast and that necessity requirement. We offer that support as well. So feel free to reach out to us. We are here to help, and we want to make sure that we can help keep as many small businesses as prosperous as possible during this tough time. So with that, thank you for joining us today. I know it's a ton of information. It's not the best topic to really necessarily talk about given the circumstances, but it's a great opportunity for many businesses to receive some additional cash flow and stay operating. So thank you for joining us, and take care.